Well, in the event of a market downturn, investors want to look for tax strategies to help preserve their wealth. Joining me now with some advice, Dan Geltrude, the founder and CEO of Geltrude Company and author of the book, Dogs Taught Me Everything I Know About Business. Dan, good to see you. One strategy investors may have heard of is tax loss harvesting. Can you break down the benefits?
Sure. So if you have some investments out there that are not performing or you don't think are going to perform the way you had originally anticipated, now may be the time to sell that. You collect those losses to offset your capital gains. So that's what tax loss harvesting is about. Now, if you don't have enough losses to offset your capital gains, or I should say if you have more losses than capital gains, you get to carry that $3,000 first, $3,000 against ordinary income, and then you can carry that into the future to offset ordinary income. So it's all about managing your portfolio to see where you have losses, where you have gains, how you could offset them.
And so there's one other thing that you talk about as well, which is a wash sale. What exactly is a wash sale? Can you break that down?
So what people may be thinking, hey, now's a great time to sell a stock at a loss. I'll take that loss, offset my gains, and then I'll repurchase the stock. Not allowed. You have to look at a 30-day window before and after the sale, because that will negate the tax offset or the tax benefits. So the whole thing about a wash sale is to stop people from these quick sales and repurchases only for tax purposes.
What about Roth conversions? When does it make sense to convert assets?
Well, let's just back up for a second and talk about how a Roth works. Now, the whole thing about a Roth is it has after-tax dollars in it. It grows tax-free so that when you pull that money out, you are not paying any tax. So looking at what the rules are, when's the best time to use it? So it's really ideal when you know you are going to be in a higher tax bracket later on, so that you would get the benefit of taking that money out and not have to pay higher taxes. The same thing goes with if you're currently in a lower tax bracket. That's when you want to put those dollars in post-tax so that you get the long-term benefit of that.
And so with all this in mind, how can taxpayers perhaps maximize their potential deductions and credits during a downturn?
Well, I think the first thing that you have to look at is always to look at increasing those contributions into your IRA or your 401k, because that immediately will take down your taxable income. You also have to look at those tax credits that are out there, the earned income tax credit, the child tax credit. These are things that are out there that if you qualify, you absolutely want to take advantage of. Let's not forget student loan interest, your HSA contributions, your medical expenses that exceed 7.5% of AGI, you get tax benefit from all these things. So there's a certain awareness that you need to have for what's available to give you the best legal outcome with your taxes.
So what are some of the new tax policies that could impact high net worth investors?
Well, here's the thing. We haven't had a lot of tax changes as of now, but the main thing is to look at where we're going to go with the Tax Cut and Jobs Act, because at the end of 2025, that's going to expire. If they can't come up with a tax deal in Congress, what's going to happen? You're going to have estate taxes going up, individual tax rates going up, loss of business deductions. There could be adjustments to capital gains tax rates. There's always that carried interest that's out there that people are always talking about getting rid of. That's for your hedge fund managers out there. And of course, corporate tax rates. So really what's happening here, Brad, is we have to look to see whether we're going to get new tax laws or what we have now expires, and then we're going to have some significant tax increases. So it really all depends on what the president and Congress will be able to do this year.
Certainly. Dan, thank you for taking the time here with us.
Thanks, Brad.